I want to turn now to Jeff Buchbinder, equity strategist at LPL Financial. Jeff, great to have you with us. So I want to start with this Santa Claus rally, and your note actually had some really interesting statistics there that over the last 5 years, I hope I broke this down right, but over the last 5 years, that in this period of time, we're seeing that it's likely 80%, give or take about 2%. I believe your note said 78%, likely to be higher. Now, when I was reading that, I thought, well, this market has been a little bit confusing and interesting, to say the least, throughout this pandemic. I'm wondering how you see this rally faring over the next couple of days in the midst of a pandemic still.
Yeah, thanks, Kristin, for having me on. If there was ever a year where you would think the Santa Claus rally would work, I think it would be now, this year, because we have this stimulus just being signed into law by the president yesterday. So you were right in citing that nearly 80% mark. That's the batting average, how often this 7-day period is up. That's the last 5 days of a year, and then the first 2 of the following year. You also get an average gain of about 1.3% during that period. That is one of the best 7-day average gains of the entire year. We think that momentum will continue into next year. But some of the reasons why this pattern holds, you hear people talk about, traders going on vacation and squaring their books. There's typically not a lot of bad news released at this time of year. If you have positive momentum heading into December, which certainly we have this year, you tend to just carry that momentum through the end of the year and into January. And then certainly people are in a good mood with the holidays.
How important is that momentum, at least to some of the first trading sessions we're going to see in 2021?
Well, certainly we in LPL Research look at technicals, and a big part of technical analysis is momentum. You can also look at where we are in the cycle. And early stage markets like we're in now tend to see further gains. In fact, the average 2-year gain at the start of a bull market is close to 70%. But you actually see bigger numbers than that if you look back at 2008, 2009. It's been really interesting to watch this bull market follow the path of the 2008, 2009 bull. So even though we're already up 65% off the lows, tremendous gain, if we continue to follow that pattern of 08, 09, we'll see solid gains in 2021 as well.
I'm wondering how you see the economic recovery really chugging along next year with the passage of this stimulus bill. I know a lot of folks are pleased to see that deal was finally done and that it was finally signed. But we also see a lot of folks talking about how tiny it is. I know that the House is set to vote on perhaps individual stimulus checks as large as $2,000. But right now, all we know is that folks are going to be receiving a check of $600, which is not very large, especially after they have been struggling through this pandemic for months. And we know the economy relies a lot on consumer spending. So how much of a boost do you think, at least on the consumer side, this stimulus package actually can be? And how do you think it's going to be boosting the recovery next year?
It's important to keep it in perspective, just how much stimulus we've gotten this year. This is the 5th package. It's not one of the bigger ones, certainly the CARES Act, much bigger. But if you add up the 5 packages we've gotten, fiscal stimulus this year is about 16% of U.S. GDP. That's tremendous. And then you add to that the Federal Reserve, which has done a significant amount of stimulus as well. The Fed's balance sheet has grown by about the same amount, by about 15% of GDP. So that's about a third of the economy. If you add all that together, that's being provided in terms of stimulus to strengthen that bridge. The key point for investors to keep in mind is if we can strengthen that bridge and get to the middle part of next year, this economy can really be rolling on the back of a strong foundation that stimulus helps provide, particularly for consumers.
All right, Jeff Bookbinder from LPL Financial, thank you so much for bringing us all of those insights. Happy New Year to you.